Welcome. We are at Network 18's Rising Bharat Summit. We are joined by Rajul Kothari, partner of Capital League. Rajul, so good to have you here. I'll ask you first question about, we're seeing a plenty of market turbulence right now. What are you making of the retail sentiment at this point of time?
See, the thing is that we have all kind of clients and we talk to all kind of people. So investors who've been in the markets, who have their portfolios, who have been investing for the last 15, 20, 25 years, they are not very perturbed because they're still sitting, if you look at their long-term returns, they're still sitting at a mid double-digit kind of returns from equities. And if they follow in a prudent asset allocation approach, then, their portfolio would have actually fallen by far less compared to where the markets are. But if you talk to some of the youngsters or, new age investors who have invested in the last, let's say 4 or 5 years post-COVID, and you look at their portfolios, they mostly had small caps in their portfolios. They had gone for a lot of these IPOs in their portfolios. So those stocks are anywhere down from 30% to 70% also. So, and these same investors, a number of them have also leveraged positions. So combine the two, that some part of your portfolio is in small caps, and in the large caps, you actually have leveraged positions. And in a falling market, then it seems that your portfolio looks a lot worse compared to a normal, a prudent, well thought out asset allocation kind of a mix which you would have in a normal portfolio. So these are the people who I would say are really nervous. And I'm just wondering how they would react if markets were to correct by another 10%, because mid and small caps are still overvalued. I mean, they're not undervalued. When the pendulum swings to the other side, we could have a phase of undervaluation also. But even at current prices, they are overvalued. So if there is a further correction of 15 to 20%, 10%, then what happens? That is when probably we'll see blood on the streets.
Okay. What will be your advice to investors, like to hold on to the current investments or to cash out? What will be your advice at this point of time?
So if your time horizon is long enough, then we just ride out the volatility. We don't know where the tide turns. But if someone is looking for a income requirement, and let's say for 2 years they're withdrawing from their portfolio, so that to some extent can be safeguarded, that you don't kind of dip into your principal. So people can look at their portfolios and decide on that. But no need to panic. India is on a strong wicket. Our macros are quite strong. Through this tariff tantrum, what is going on, we will not be impacted as much because only 3% of our economy is dependent on exports. So, and we could actually benefit because the tariffs imposed on other Asian countries or some of our competing countries are far higher. At the same time, the Indian government is currently negotiating a bilateral trade agreement with the US. So once the dust settles down or there is a sense of equilibrium, we may realize that India can actually gain from this opportunity. But right now, as long as the disequilibrium lasts, and we don't know when it will end, given that, Mr. Trump is so volatile. Today he says something, in a few days if he says something else. Till that phase of uncertainty gets over, markets will not settle because markets do not like uncertainty.
Okay.
So we just have to ride this out. If you have a long-term view, then just don't look at the markets, don't look at the portfolios, and you'll be fine.
Absolutely. Uncertain times at this point of time. But Rajul, what is the sentiment of HNI investors at this point of time? Like, what are you seeing in the current market sentiment? You did say that markets don't like uncertain times. But if you look at India compared to other markets, if you look at from April onwards, we have fallen better. We have
fallen far less
compared to
Japan,
other markets. So how are you seeing the sentiment of the HNIs at this point of time?
So I would say that some of the HNIs who have some cash surpluses left, they are bottom fishing. So any stock, any fund, they feel they're investing, coming back to the markets in a staggered way. But obviously, even, if someone has cash, today does not make sense to put all of it, given the continuing uncertainty. But a small percentage, like 10-20% of your remaining liquidity, you could start investing. And on every dip, you can start a small percentage. invest a small percentage. So that is the common sentiment.
Okay. Okay. Thank you, Rajul. Hope we have more conversations with you
Sure.
around
Thank you
this.
so much, Lovisha. Thank you.